The car dealership business model has changed in a way most car buyers do not realize. According to the National Automobile Dealers Association's own data, the average dealership now earns more profit from the finance and insurance office, commonly called the F&I office, than from selling the vehicle itself. According to Cox Automotive Industry Research, the average dealership profit from F&I products and financing markup is approximately $1,700 to $2,200 per vehicle sold. That number does not come from negotiating the sticker price. It comes after you have already agreed on a price in a separate office with a separate person using a specific set of well-documented sales tactics that most buyers have never been taught to recognize. Today, I am going to expose the 5 specific tactics dealerships use to extract that extra $1,700 to $2,200. Name them specifically, show you the real dollar cost of each one, and give you the exact counterscript to neutralize every single one of them the next time you buy a car. Before we continue, everything in this video is for educational and informational purposes only. It is not financial, legal, or automotive purchasing advice. Practices vary by dealership, and not every dealer uses every tactic described. I am not a licensed automotive or finance professional. Please do your own research before any vehicle purchase. With that said, let us get into the tactics. Let me explain why the F&I office exists and why it generates more profit than the car itself. When you negotiate the price of a car on the sales floor, that negotiation has become increasingly transparent. Online tools let buyers see invoice pricing, manufacturer incentives, and competitor offers before they ever walk into a dealership. The margin available on the vehicle price itself has compressed significantly over the past 2 decades. In response, dealerships shifted their profit strategy toward the F&I office, the room you visit after agreeing on a price, where you sign the actual paperwork. This is where financing terms get finalized, where extended warranties and add-on products get presented, and where a series of well-practiced sales techniques are deployed by people whose compensation is often directly tied to how much additional product and markup they sell you in that room. According to Edmunds and Cox Automotive Research, the F&I process typically takes between 45 minutes and 90 minutes, specifically because it is during the most fatigued part of the buying process, after the negotiation, when buyers are mentally ready to be done and most likely to simply agree to whatever is presented next. This is not a conspiracy theory. It is documented industry structure, openly discussed in automotive trade publications. Let us go through the 5 specific tactics. Tactic number 1, financing rate markup. When a dealership arranges financing for you, they typically submit your application to a bank or credit union and receive a wholesale interest rate you qualify for based on your credit. The dealership is then legally permitted to mark up that rate before presenting it to you and keep the difference as profit, called dealer reserve or finance reserve. According to a Consumer Federation of America analysis of industry data, dealer rate markups commonly range from 1 to 3 percentage points above the wholesale rate the dealer actually received. On a $35,000 auto loan over 6 years, a markup of just 2 percentage points, for example from a wholesale rate of 5% to a marked up customer rate of 7%, costs the buyer approximately $2,200 in additional interest over the life of the loan. The counter. Before visiting the dealership, get a pre-approved auto loan rate from your own bank, credit union, or an online lender like Lightstream or PenFed. Walk into the F&I office with that pre-approved rate in hand. If the dealership's financing offer is higher than your pre-approved rate, say exactly this: I already have financing approved at this rate. Can you beat it? If not, I will use my own financing. Dealerships can still earn a small reserve on a competitive rate, but having your own pre-approved offer eliminates most of the markup room. But here is what nobody is telling you. Financing markup is just the first tactic. The next set of tactics happen through a series of products presented one after another, each one framed as protecting your investment, and each one carrying a profit margin for the dealership that is often 3 to 5 times what the same product would cost from an independent provider. I'm going to name every one of them right now. And if this is exactly the kind of consumer protection content you wish someone had shown you before your last car purchase, subscribe right now. We release financial investigations exactly like this 3 times every week, all free, all built to arm you with information before you need it. Tactic number 2, extended warranties and vehicle service contracts. These are presented as protection against expensive future repairs. The dealership markup on extended warranties is among the highest of any F&I product. Industry analyses commonly cite dealer markups of 50 to 100% over the wholesale cost of the warranty contract. A warranty that costs the dealership $800 to $1,200 wholesale is commonly sold to consumers for $2,000 to $2,500. The counter: if you want an extended warranty, you do not have to buy it at the dealership, and you do not have to buy it the day you purchase the car. Most manufacturer extended warranties can be purchased anytime within the original warranty period, directly from the manufacturer or through independent warranty companies, frequently at 30 to 50% less than the dealership F&I price. Tell the F&I representative, I will consider an extended warranty later. I do not need to decide today. Tactic number 3, add-on products including paint protection, fabric protection, VIN etching, nitrogen-filled tires, and gap insurance bundled at marked up prices. Many of these products cost the dealership very little to apply or provide and are sold at significant markup. Paint and fabric protection packages, for example, frequently cost the dealership $50 to $150 to apply and are sold to consumers for $500 to $1,000. The counter for add-ons in general: decline by default. Say no thank you. I am not interested in any additional products, clearly and once. If a specific product is repeatedly pushed, ask directly, what does this cost you wholesale, and what is the markup? Dealerships are not required to answer, but the question itself frequently ends the pitch because it signals you understand how the process works. Gap insurance specifically deserves a separate note. Gap insurance, which covers the difference between what you owe on a loan and what the car is worth if it is totaled, can be a legitimately useful product for buyers with little money down on a depreciating vehicle. But it is almost always available significantly cheaper through your own auto insurance carrier as an add-on to your existing policy rather than through the dealership. Stay with me, because the final 2 tactics are the ones that operate before you even reach the F&I office, and they are arguably the most financially significant of all 5. One happens during your trade-in appraisal. The other happens through a single sentence that changes the entire framing of your negotiation. Let me show you both. Section 6, Tactics 4 and 5, Trade-in, Lowballing, and Payment Framing. Timestamp, 600 to 800. Hey-gen tone, investigative then confident tactic. Number 4, Trade-in undervaluation. When you trade in your current vehicle, the dealership's appraisal is frequently lower than your vehicle's actual market value, sometimes significantly so. According to Consumer Reports research on trade-in practices, the gap between dealer trade-in offers and private party or independent market value commonly ranges from 10 to 20% below fair market value. The counter: before visiting any dealership, get your trade-in value independently from Kelley Blue Book at kbb.com and Edmunds at edmunds.com. Get an actual cash offer from CarMax or Carvana, Both will give you a firm written offer you can use as a baseline, even if you ultimately trade in elsewhere. Walk into the dealership knowing your car's real value and treat the trade-in as a completely separate negotiation from the new vehicle purchase. Never let the dealership combine both numbers into a single confusing total. Tactic number 5, monthly payment framing. This is the single most psychologically effective tactic in the entire process. Instead of negotiating the total price of the vehicle, dealerships will often shift the entire conversation to what monthly payment are you comfortable with. This sounds helpful. It is actually a tactic that allows the dealership to manipulate loan term length, interest rate, and the underlying vehicle price simultaneously while keeping you focused on a single number that obscures all three. A dealership can hit almost any monthly payment target you name by simply extending the loan term, moving from 60 months to 72 or 84 months, which dramatically increases total interest paid even if the monthly number looks acceptable. According to Edmunds data, the average new car loan term in the United States has extended to approximately 68 months as of 2025, up from approximately 60 months a decade ago, a shift that researchers directly attribute to payment-focused negotiation tactics. The counter: never discuss monthly payment until the total out-the-door price of the vehicle, your trade-in value, and your financing rate have each been negotiated and agreed upon separately in writing. If a salesperson asks about your target monthly payment, respond with, "Let us agree on the total price first. We can discuss payment structure after." This single sentence removes the dealership's ability to obscure the total cost inside a manageable sounding monthly number. Here is your action plan. 5 steps, one for each tactic. Step 1. Get pre-approved financing from your own bank or credit union before visiting any dealership. This single step neutralizes most of the financing markup opportunity and gives you a concrete number to compare against any dealer financing offer. Step 2. Decide your position on extended warranties and add-on products before you walk in. If you want an extended warranty, research independent providers and manufacturer direct pricing first so you have a comparison point. Default to declining all add-on products presented in the F&I office and revisit any of them later outside the pressure of the room. Step 3. Get an independent trade-in valuation from Kelley Blue Book and Edmunds, and get a firm written offer from CarMax or Carvana before negotiating your trade-in at any dealership. Treat the trade-in value as a separate independent negotiation. Step 4. Negotiate the total out-the-door price of the vehicle completely before any conversation about monthly payment. Get the agreed total price, your financing rate, and your trade-in value each confirmed in writing before discussing how the payment is structured. Step 5. When you reach the F&I office, expect the process to take time and expect multiple products to be presented. Stay polite, stay direct, and use the specific counter language for each tactic. You are not being rude by declining. You are participating in a sales process that both sides understand. For free tools, Kelley Blue Book at kbb.com and Edmunds at edmunds.com for vehicle and trade-in values, CarMax at carmax.com and Carvana at carvana.com for firm trade-in offers, and your own bank or credit union or online lenders like PenFed and Lightstream for pre-approved financing rates to compare against dealer offers. Before we close, one final reminder. Everything in this video is for educational purposes only. Practices vary significantly by dealership, region, and individual sales representative. Not every dealer uses every tactic described, and some of these products can be legitimately useful for certain buyers in certain situations. Please do your own research before any vehicle purchase. But here is what I want you to take from this video. The $1,700 to $2,200 in average F&I profit per vehicle is not random. It comes from 5 specific, Well-documented sales tactics deployed in a specific sequence at a specific point in the buying process when you are specifically most likely to simply agree. You now know all five. You know the real dollar cost of each one, and you have the exact counterscript for each one. The next time you walk into a dealership, you are not walking in unprepared. If this is information you wish someone had given you before your last car purchase, subscribe right now. We release financial investigations exactly like this 3 times every single week. All free. And I want to hear from you. Have you experienced any of these 5 tactics at a dealership? Comment the number 1, 2, 3, 4, or 5, or comment all 5 if you have seen every one of them. I read every single comment. I will see you in the next one.